Alright, so before we dive into the best practice for buying a car, please make sure you smash the like button, comment below, and subscribe to the channel as we are a growing community. And essentially my goal is to make sure that everybody does the best that they can financially and elevate. The beautiful thing about this topic is I am a car buying connoisseur. Just to get started here, I want to talk about how many vehicles I have owned personally. So the first one I owned, I bought off of my mother, and it was a 1996 Mercury Sable. That's one.
A Honda Accord 1990, the Audi A4 96 again, Ford Fusion 2007, which ended up getting totaled, Ion TC 2006. That's Ford Edge 2007, but it was a Honda Civic, I think it was a 2000. You got a Mazda 3 2015. That is 8. I ended up getting a Dodge Caliber 2010 for college. My current Honda Civic 2017. The truck that we have today is 2014. There was a Honda Accord, I think it was a 2013.
So that makes it 12 cars. So just to get started, building credibility like always, I want to make sure that everybody knows that I have purchased cars and I have purchased them in multiple different ways. So when I talk about the steps here, this is the best practices I have found when it comes to buying cars and making sure that you get the best interest rate, that you don't mess up your credit doing it, and that you maximize how much you get and what you get for your money. So there are many scenarios when it comes to buying a car. So whether you are wanting to trade in that car that you had for the last 5 years that keeps breaking down on you, or you're buying your first car, these 6 steps here completely apply to everything that you need to do to make sure that you are not being robbed. All right, so credit score 660 or above. That is essentially what I recommend, because of the simple fact that with a lower credit score than 660, you're going to get destroyed when it comes to interest rate. Now, that doesn't mean you can't get a car if you're below 660. What I recommend if you're below 660, like I always say, your credit score goes up over time. I recommend you go to one of those buy here, pay here places that don't check your credit when you're buying that car. I actually bought my Honda and my Audi A4 with one of those places. Usually they'll include that interest rate into the car, so you actually know your bottom line, and then you know your payments. Usually they'll go with, you have to prove that you have a job, and then they'll ask you to pay every time you get paid, or on a monthly basis. You could usually negotiate because they want to sell those cars. Keep that under $3,000. This is just a car that you want to drive while you're building your credit back up. So it's not a forever car. It's just, you know, sometimes you got to be in the gutter to make it to the hills. So get yourself that $3,000 car, make that payment every month, and then build your credit up so that you can buy the car that you want with an acceptable interest, because you're working on your credit during that time. Step number 2, if you're at 660 or above, is to get that pre-approval. I recommend going to a credit union or bank. Do not go, I repeat, do not go to the dealership and go get your approval there, because they will run your credit with every bank they have a relationship with. Now, Experian does say that as long as you're within that 7-day window, you're allowed to shop for the best rate, and it only count as one inquiry. But it also says all the shopping you did essentially will show up as different inquiries, but when measured, it will count as one inquiry based. So you don't want to do that, because you're leaving it up to chance on whether they're looking at it as one inquiry or as multiple. Go through a credit union. They usually have the best rates. I've used PSCCU. If you're in Pennsylvania, I've used People's First Credit Union. They usually have really good rates for their members. Use a bank. Banks usually have higher interest rate percentages, but the fact that you're only using one inquiry to get that pre-approval and get that loan is what we're looking for when I say going for the pre-approval. Now you got pre-approval. The next step is to go find a car. I don't mean going to a dealership. I mean doing that online, because those prices are meant to attract. Look for a car on your phone, and at the same time get that trade-in appraisal if you have a car that you plan on trading in. Kelley Blue Book will be the best place to do that. It will give you a price based on the trim you have, the model you have, the different things you might have added or not added to it. I had the Scion TC, like I said, and I wanted to trade it in to get a new vehicle. And I went to a dealership and they offered me $800. Now, I personally have put more than $800 on that vehicle, so I knew it was worth more than $800. So I said no, walked away, and I went into Kelley Blue Book to get a value of my vehicle. Ended up being $4,500 trade-in, and it gave me a bargaining chip. Now, the thing about Kelley Blue Book is that dealership have a million rebuttals for it. So you'll have different tools to use that I'm gonna give you here in the next steps. Now, for finding a car, there are multiple different avenues you could go about it. I don't get paid to promote any of them, but there's Car Guru and all the different ones that I'm gonna put on the screen right now because I can't remember the names. But I personally have used Car Guru to find vehicles multiple times, and it's been very helpful. Now, after you find the car that you want and get the trade-in value of your vehicle on Kelley Blue Book, call the dealer. Talk on the phone about your expectations, what you want to walk out of there with, how much you're willing to pay for the car, how much you want for your trade-in value, why you want that much for your trade-in value. This is where you find out whether you can have what you want or not from that dealership. Never step into their domain. Stay in your domain until you have enough weapons to go in their domain and come out on top. This is where I talked about the vehicle that I liked, how much they were selling it for, where I saw it in different places, and how much they were going for if I wanted to lower their price. I talked about the trade-in value. Now, obviously, Kelley Blue Book, they have a lot of rebuttals when it comes to that. They'll say Kelley Blue Book doesn't know this. We'll have to look at it. Maybe we'll get to it. Now, you tell them that Kelley Blue Book says it's $4,500 trade-in value. Usually, you can print that sheet and bring it with you. But the last dealership I went to says they'll give me $3,000. I still owe $3,500 on this vehicle, so I do not want to take less than that $3,500, which is why I walked away from that dealership. That lets them know two things. Number one, that you've done your research and you know what you're talking about. Number two, that you are willing to walk away from a deal if it doesn't meet your expectations. This phone call is the most important part of buying a car. Say you got pre-approved for $30,000. You do not tell them that you were pre-approved for $30,000. You find the car you want, and you only tell them you're pre-approved for what you want to pay out the door. So, for example, I was pre-approved for $30,000 when I went to buy that car in New Jersey, but I told them that I was only approved for $10,000, and I already have the check. Did I have the check? No. Was I approved for more than $10,000? Yes. But at the end of the day, what this does is it lets them know that you are not playing games with them. This is what you want. You've come out up front and let them know what you have, and you are not willing to budge from that. You do not want to put anything down. The $10,000 is what you're paying. Don't expect to go to a dealership and still not get the runaround. They will still give you the runaround when you get there. But at the end of the day, if it doesn't come out to what you talked about, don't be afraid to leave. Number 5, you go to the dealership and you test drive the vehicle. The important part is not you driving it. If I sit in a Ferrari and drive it, I will love it. If I sit in a Honda and drive it, I will love it. So at the end of the day, feeling like you're buying a new car, you will always love the drive. The part about this that you want to take away is to go get the vehicle inspected outside of that dealership. I personally worked at Firestone previously, and we had a $10 complete vehicle inspection where they looked at your tires, your brakes. You're essentially paying them for them to find things to charge you to fix. Once they come out and give you that bill at the end of the inspection, there's gonna be recommended things like things that are based on mileage. Don't look at those. What you want to look at is the things that it needs right now. Now, if it needs things and you feel like you can take care of that, it's nothing big, you'll take care of it, cool. Go back to the dealership and buy the car. But if you get to that portion and it has a bunch of things wrong with it that you don't want, I personally go back to the dealership, return the car, say I didn't like the test drive, and walk away. The reason why I walk away is because if there's one lemon on the lot, it's most likely there's gonna be more than one. So I don't want to deal with that dealership anymore. I go back to the drawing board and I start looking for a car again, and then I go back through the steps. Okay, so let's say that you go to Firestone and they run the inspection, they tell you there's nothing wrong with the car and you actually like it. So what you do then is you go back to the dealership to buy the vehicle. Now, this you gotta make sure is on your terms. It's the most important portion. Don't get so in love with the car, there's nothing wrong with it, that you get away from your terms. What you wanna do is make sure that the expectations that you talked about in step 4 are still being met in step 6. So why follow the 6 steps? The reason why you wanna follow these 6 steps is very simple. Number 1, you don't get yourself into high interest loans, high interest debt. You're buying already a depreciating asset, which means it loses value over time. You don't want the loan that you take out, which is a liability, to continue to grow or to be larger than the asset that you're buying. So you want to make sure that you're buying something that will be useful and not deteriorate your net worth or income. Number 2, it puts you in a position where you're not being played with and you're essentially doing the deal. You're stepping into a car that you want. Now you got a new vehicle, and not only is it not a lemon, it's not gonna cost you a lifetime of hurt. Let's say you decided you don't want to listen to me and you don't want to get pre-approval, so you're going to go through the dealership to get your deal. Now, there's 4 things that I want you to know when it comes to going through a dealership. Monthly payment, your out the door price, which is usually the vehicle that you're buying plus all the fees. So the bottom line. And then over here you'll have your trade-in value. And over here you'll have your down payment. This is what's known as the 4 square. The 4 squares essentially is how the salesperson at the dealership is going to present your options. Don't ever go into a deal saying that, oh, the only thing I want is $300 a month, because what's going to happen from that is they won't budge on the trade-in value or budge on the vehicle cost and make it seem like your down payment or the length of the loan is the only way to lower that monthly payment, which is not true, as you can tell with these steps. So as long as you follow these steps, you'll be in charge of all this. You'll be able to get your trade-in value higher. You'll be able to get your out-the-door cost capped rather than leave it uncapped for them to play with. You'll be able to not have a down payment. Out of all the 12 cars, the only down payment I've ever put was with my mom's car that I bought and with the Honda and the Audi, because it was one of those buy here pay here type of deals. So I had to come up with $1,000, and then the rest of it I was paying monthly until it was paid off. So with that being said, you want to avoid this as a whole. This is a game, it's a loop. It will continue as long as you don't learn about these steps. Stay away from going into a dealership to finance. Although yes, they probably can get you a better rate somewhere else, it's going to be at the cost of your credit and at the cost of these games that you don't want to play. So if you stayed for the whole video, I appreciate that. I want you to please like, comment, subscribe. Tell me about a time that you went to buy a car and how they ripped you off, or how you did better than what I did. Whatever makes you happy. Send this video to somebody looking to buy a car. Send it to somebody that will learn from this. My advice is always what has worked for me. It has worked for the people that I've told to do it as well. But at the end of the day, take it with a grain of salt. What I want you to do is make sure that you follow these steps. For people below 660, what I will say is you skip this, but all of these still apply. So you still want to find your car online. You don't want to just go there and let them dictate what they're gonna get you into. Because at the end of the day, if you're desperate, essentially, or come off as desperate for a vehicle, they're gonna get you into the car that they want to get rid of. So make sure you stay away from going into any situation where you're desperate, especially when you're going into finance. Thank you for all the support. Thank you for all the love. Please like, share, and subscribe. And let's continue to elevate.